All right. Recording is active. Are you able to see my screen? Hello?
Yes, I'm sitting on the I'm sitting on your disclaimer page.
All right. Okay. So let me switch it. Okay. Now you can see my chart, correct?
Yes.
Okay. So we'll make some basic observation and notes, something that will help you, let's say next week onwards. Okay. Now, every day I share with you something called the EU high and EU low. Okay. So that's essentially for you, that is Globex. For me, that is London high and London low. Now, the reason I share that reference with you every single day is to give you an indication that the moment we are above the EU high, you don't want to think about outright shorts. And the moment we are below EU low, you don't want to think about outright longs. So essentially, this is that piece of reference that allows you to gauge potential strength or weakness during the RTH session. Clear?
Okay.
So everything that I walk through, you have to confirm that you've understood how I have taken you through.
Yes, yes. You're
Okay,
saying
so
above the EU high, no shorts. Gotcha.
okay, so it's not a thumb rule, no shorts. It is where you need to now have awareness that we are possibly finding acceptance in the higher territory. Now, second, and the most important reference level then comes by is today's open, the opening level. So what we are looking at is where did ES open today? So if we look at an example, let's consider today's session. The open was at 4198 in ES. What we understand of today's structure, we understand this is a weak structure, correct? Because we were under for most of Globex. We spent under yesterday's low, right? Which is at 4204. So when you spend under prior day's low during Globex, indicates weakness. Again, please, as we walk through this, remind yourself constantly, all we are looking for is strength, weakness, or neutral. So in this case, what we know, below EU low, weakness, above EU high, strength, that's the kind of indication you want to have. Similarly, spending Globex below prior day's low is weakness, spending above prior day's high is strength. So these are basic clues to just understand the structure of what is happening in the markets. Third, we then look at the opening level. Is price holding above or below? Now, when we talk about holding above or below, it is essentially watching on a 5-minute candle at the very least to see if the body is developing above the open or below. So as it is developing above the open, so right in this case, think about it. So when we open above EU high, which in theory is indicating strength, correct?
Correct.
At the same time, we have spent majority of the time in Globex below yesterday's low, which is on primary basis, there is weakness, but within that period, there is a small indication that we are above EU highs, which means there could be a potential recovery underway. So now you see how we bring in the larger picture, which is holding below yesterday's low as the primary reason, which is negative, which is indicating weakness. And then we look at EU high, which says, okay, there might be a little strength. So what we now do is we observe the open. What's the opening level? 4198. So when I take this purple dotted line, let me change that to, I don't know, pink or something. Okay, so what do we see? Now, this is where you start forming a story. A, we are below yesterday's low, weak. B, we are below today's open as well, weak. which means I'm now going to short, and this is exactly what I shared with you on Discord. Unable to get back inside yesterday's range, now below the open 41.97. Use that as a gauge. EU highs give up, this drops even lower. So I'm being very clear with you. You have to use today's open as a guide, and there you go. You want to short with a standard stop loss of 5 points, 6 points at best. That's about it. Or prior day's low. That's your stop loss. And there you go. We never really managed to stay above the open. And whenever there was a slice through of EU high, we dropped all the way pretty close to EU lows. So when you are taking a trade, you want to form a story. Why am I taking a trade? What are these references that I have shared with you and what they mean? So, like I said, as we start today's session, what do we know? It is weak, period. There's no other way to look at it. Number two, if there is strength, the strength has to be going back inside yesterday's range, which clearly rejected. Sellers in control. Now, below the open, I want to short and use EU high to validate my trade. Now, I'm sure you are familiar with the concept of stop loss, correct? That I put a stop loss,
Yes.
I'm wrong, I got out of the trade. Now, that is one way of thinking. I think the other way around. That is, forget my stop loss. That's the max risk I have accepted. But I want to know much before that stop loss, is my trade idea correct? So when I short against the open, right, using the open as a reference level, I take a short. Now, at that point, I'm like, you know what? I've taken this short, but what tells me I am in the right direction if EU high can break? If EU high can break, I then know I'm completely correct because we already know sellers are in dominant position. Given the fact we are below yesterday's range, sellers are in dominant position. Given that we are below today's open, and the only thing I need to confirm that thought is to break EU high because that's the only reference that within the weak structure is suggesting there might be some form of upside merit. But now you see, as I've walked you through, we have two elements confirming weakness and one element confirming strength. So it's 2:1. And whenever you have these ratios, 2:1, 3:1, you know that in this case, the short is a better idea. So always ask yourself, where are we? What are the references around me? How can they help me? What is the overall picture? Is it strong? Is it weak? Is it neutral? If it is neutral, then you're fading to ends of the market. But if it is not neutral and it is weak, you're looking for one good location to take your shot. So
Makes perfect sense.
right, so this is how you want to think. And again, I can obviously show you or walk you through hundreds of examples, but somewhere I would encourage you to reach out to me. Just a moment.
Sorry, you kind of broke up there. Are you there?
Yes, I'm there, sorry.
Okay.
So somewhere along the lines, next week onwards, I don't know what time you are available at your desk, but preferably before the open, 30, 45 minutes before the open, and just send me a message, send me a note. Okay, RS, I'm at the desk and this is what I'm seeing. This is the EU high, EU low. We are opening in the middle. We are below the balance range. We are above the balance range. Whatever it is, what does it mean? Because somewhere, Keith, to become a successful trader, you need to understand what everything means. So think about it. This is the balance range I've shared with you. Now, what does this balance range imply? It implies that as long as you're within the balance, this is chop, okay, which means you go to any ends of the market you have to fade. It goes to the top, you short, it goes to the bottom, you go long. That's typical. But when you break down, that happened yesterday, weakness. And it's the same story. Look at this. Where's the open? So it's a 230 candle. Sorry, we opened at just a second. Chicago time. There you go. At 8:30 is when markets open your time. And what do you see? What's the opening level? It is 42.53. Now, this is where you have to observe. So we are below the balance. We are below the open. So let me just take you to a 5-minute chart. There you go. So in this, right in this minute, okay, so we are below the balance. We are below the open. RS already indicated, and this is the message I sent you yesterday. There you go. ES looks like it is opening below yesterday's value area low, negative. Now, likely it wants to test lower 40s. Lower 40s means 40, 41, 42. 46, 47 has been tested one too many times. Now, when I sent you this message, if we go on a minute chart, literally on a minute chart, when I sent that message, we were trading at 42.50 at that moment. And when I'm telling you this is weak, it means it is weak. Now you take a short because you know the opening level, which is 42.53. You know this is the balance bottom. We've broken out. So just think about it. All this time, I'm just going on a little larger time frame now. So all this while, what you will realize is that yes, we did find bounce attempts at the bottom, but please recognize that all those attempts found resistance at the same place. So it's telling you a story that there isn't much traction by the buyers of this region, which means this region doesn't have enough fuel to have the aircraft take off. Think of it in that manner. So when there's no fuel, it's not going to take off. If it's not taking off, it's coming back down and it's going to go lower somewhere to find more fuel that allows it to take off again. In the interim, we have broken the balance. And when we break, it's a breakdown of balance below the open, below value area. Again, if I mark those EU highs and lows for you quickly, so this is your EU high and this is your EU low, this red dotted line. Now, what do we know? EU high, we broke the balance. We are below the open. We're below the EU low. Done. We are below everything. I send you a message. There's weakness. It is a short. And at that time, you take those shorts and let it run for whatever subsequent targets that are there. Again, targets are shared with you every morning. So yesterday, where's yesterday's post here? I had shared with you targets, downside targets 42.39, 42.22, and 4194. I shared with you 3 targets to the downside. I have taken a short. We are below the open, below balance, below EU low, below all references that are important in that moment. They're all, it's in a cluster if you think about it, right? Balance low at 52. The open at 53, the EU low at 48. It's a cluster. So that entire region of 48 to 52 is confirming weakness to you. Now, so far, are you with me?
Yes, it always looks easier when you look back.
No, now this is the thing. Did you look and track these references the way I am walking you through at the time, is the question.
I was, but I wasn't sure that it was going to continue down. That's the reason I didn't take it. And then I've been burned on FOMO trades, so I try not to get in after it's moved.
Okay,
And
now
that's been hurting
this
me.
is where you want to define what is a FOMO trade. Are you executing at a random location? So let's say if you shorted at 42.22, I would definitely say that's a FOMO trade. But if the opening level is at 53, the balance bottom is at 52, and the EU low is at 48, which means you are shorting at a very good location where you can manage risk. That's the difference. You will never see me ever engaging at subpar locations. I don't do that stuff. I miss a move, I miss a move. I will never chase a move. But if I'm engaging, I will be very explicit against EU high, against EU low, so on, so forth.
That's what I wanted to try to break from is not that feel of engaging in the middle or something like that, but it's so hard to watch it drop and drop and drop and drop and drop.
Right. So you have to instantly, once you get my message, you want to ask yourself, what am I waiting for? Is he going to come and pull that trigger for me? And if you make a decision 20 points later, it's already 20 points. It's late. And any trade you then take is FOMO. So contextually, Keith, you have to be very, very clear where you are engaging. Your failure needs to be of a good level, and so has to be your success. And the good thing about good levels is that they always pay. So now if I just take you through my weekly plan, and I'm sure you should read this every Sunday, but very clear. On the other hand, so this is what I'm giving you on Sunday, which means I'm giving you the entire Sunday, Monday free time whenever you are available review. On the other hand, sellers will seek to hold 42, 47, 56 region to target 420820s. So on Sunday, I've given you the visual exactly where sellers will take control. When you come on Wednesday during RTH, and I'm telling you we are going down into lower 40s minimum, I'm telling you there is weakness. You know there is the open right here, EU low right here, balance bottom right here. You know all of that cluster, including the weekly plan, is saying short. So where is your entry? Between 47 and 56, or between 48 and 56. That's your entry. Because now the
Seems so
story,
easy.
right? Because the story has to be clear, Keith. It is not easy. I can talk about the stories. I can talk about every single session here and give you a story. But the thing is, real time, you have to remind yourself, where's the balance? Where's the EU high and low? Where's the open? What did RS say in the weekly plan? What is he saying today? Is everything fitting together? So your brain has to process all of this information and be ready to pull the trigger. Now, how can that happen? How can you, one, process so much in less than 30 seconds? It is through preparation. This is why I will post the chart 30 minutes ahead of time. This is why I give you those targets which are there with you much, much ahead of time. Is why I give you everything ahead of time, so you are already aware of where everything is located. So when I come online and I send a message out, this is a short. At the very least, you are able to take it within 1 or 2 points around my entry. So this morning, right? This morning, when I am telling you that, where's this thing? When I'm telling you, unable to get back inside yesterday's range and now below the open. So let's go, right? London time. Let's go to a 1-minute chart and just compare, right? I sent this message London time at 14:48, which is essentially 18 minutes after the open. So where were we at for 48? Right? So we were in this vicinity. Right? So you see this candle, this is 48, and we were in this vicinity of 92, 93. So when I am telling you that use 97 as a gauge, that is essentially your stop loss plus or minus, and I am telling you you're short 93, so you have to now watch EU highs give up, which is 89. So essentially, If 89 can give up, it will flush. And so it did. But at that moment, you must be aware that why I was negative or why I was thinking too short is not just because we were below the open. I don't have one reason for a trade. It was multi-factor. It was below yesterday's low. We have a poor low at the bottom. So I have a magnet as well. So when I take a trade, I know where ES might want to travel down to. Then I see we fill this gap, which is test yesterday's low, reject, come back below the open. And that is when I tell you, okay, below EU high now, this thing could flush. So all day today, according to me, there were longs you could have taken near the 70s, lower 70s, and made your points. But the primary trade is to short and remain short, right? Because we continue to hold below the open. Every move above EU high fails right at the open. And this is your opening level, the pink dotted line. And this is the exact read you want to have day in, day out. Same example, okay? I'll switch you over to NQ. Same thing. We broke back inside this balance, okay? What did I tell you? Yesterday, we broke below the balance. And in case of NQ, we were entering a new lower balance. So what does that mean to us? What does this breakdown mean to you? It means weakness all over the place. That is what it means. So when you try going long here, I would say you've not understood the concept on what is happening here. What is happening here is we've accepted the lower price band. And what does the balance rule tell us? Acceptance back inside targets the halfback, and acceptance below the halfback goes to the bottom. And this rejection that you see right here is the halfback of this green balance, right? Looks like a midpoint, correct? Hello?
Yes. Yes.
Right.
Sorry.
Okay. So this looks like a midpoint to you. This is the midpoint. And look what happened. Hello? Yeah.
Yeah. See.
Okay. So what happens? We come back, retest yesterday's low, which is also the halfback, reject it back below the open and flush. Where do we have to flush? All the way to the balance bottom. So you got your one trade, your one and done, because you had a very clear idea of what the balance rules are. You exactly know that the bigger picture is weakness because we've broken back inside. You also know we are below yesterday's low. That also indicates weakness. And all we now need is to be below EU high. And look at it, we break down and backtest EU high to the tick. Now, at that time, if you look back at the NQ chat, I think, was it Fooker Bob? Look at the Slayer. He took a shot at 370. Fooker Bob, 371. What is his message? Short against EU highs. Plain and simple. Why? Because these two gentlemen now have understood on why they took a shot at this location. Because they formed a story that this is weak. And how did they form it? Break back below balance, below yesterday's low, lack of traction at the halfback. And what does the balance rule suggest? Lack of traction at the halfback, rotate to the bottom. Now they see the open being rejected. Now at EU high back test, they took a shot because they knew we need a test of the balance bottom.
I was thinking about that trade and then I didn't pull the trigger.
Right? So when you go long 290, I am now going to again ask you, what is it that you saw? Because I don't see any merit, any story, any context in my books. Okay. I'm not saying the trade was wrong. Please, there are traders who look at order flow, who look at footprints, who look at various tools, and then find a level to go long or short, right? So it works for them. For me, it is about the story. Where are we? What are we doing? And where can I best engage where there's a cluster of references to support me? Now, we're at the bottom of this, right? So if you read, my green zone comes with a text, watch tempo. You know why it comes with that text? Because I know we are in a down trending market if this is not already blatantly obvious. So when we know that we are in a down trending market, it means any support that we take, we want to be watchful. Now, as you and I speak, we can see that this support is attempting to break. And how do we know that this support is not able to manage much? Because look at the bounce, it's weak. And one more noteworthy point. Literally, my zone is 14,262, and look at the low of these two candles, 269, 267, which means buyers stepped in 2-3 points ahead of my zone and already rallied enough 60-70 points but failed, which means when you are actually going to hit my support, there isn't going to be buyers present because they front ran the level by a few points. And the fact that we are trending down, there is tempo, there is weakness. So when before I take this support zone, I now want to be careful on what I am doing. But now if you see at the resistance here, I haven't put any note, no watch tempo, nothing. Why? Because it's a downtrending market. Any rip higher is a clean short for me. Same thing over here, nothing around tempo. But somewhere here I have. Now, come back to the next support. I like this support, but this support is as wide as 30 points. So what do I say? Wide zone, which means I will watch price action, how the price develops. I will take the trade. So I'm not talking about tempo. I'm not talking about anything. All I'm talking about is within this 30 points, where can I find a good location to enter? That is all what I'm going to do.
Okay.
So it's very, very important that you understand the meaning of everything that is on the chart. And that is how you will be able to maneuver better. So if you look at yesterday's chart, right? And of course, it may come across as hindsight, but these are the zones. So yesterday, I shared this support zone with you in green, which failed. Then I shared this gray with you. Then I shared this green with you. Look back. We broke down. We back tested this yellow, the blue dotted line. We back tested, confirmed that this was a balance breakdown. Weakness was confirmed here. You take a short. Now, this was my support. Of course, at the time, I did step in and say, guys, I'm in a Zoom session, but I would look for list framework confirmation before engaging. So I'm very clear, list framework. List framework are watching 4 steps to take a short. Now, those 4 steps did not happen, which means even though this support is there, you don't have a trade there. Make sense?
Yes, yes.
Right? So I am guiding you much before the support zone triggered. I'm telling you, you need to apply list framework. I'm very, very clear. So at that point, you're like, you know what? I'm not going to wait for the list framework because it's a 60-minute wait period. I'm just going to go take that trade blindly. That's your call. But the list framework is a 60-minute, minimum 60-minute time wait. You need to wait for that time until those 4 steps don't complete. Only once the 4 steps complete is when you can take a long, that is if it validates it. And it did not, because this was a single candle breakdown. But observe, this is observation, right? But observe, the support, what is support supposed to do? It's supposed to give market some form of a bounce, which it did not. But look what it did. It broke down, back tested, and the same support turned into resistance, confirming weakness. Now see, I don't know other traders how they work, but my zones, if a support fails, then by default, that support becomes a resistance because it failed to do what it was supposed to do, which means now it is resistance, right? Default. What is
Right.
support becomes resistance, resistance becomes support. So the zones are so effective that you see another confirmation that this is breaking down. So you have confirmation number 1 here that we are back inside the balance, which means there's a risk of the balance half back. At the same time, you get another confirmation, support failed and turned resistance, again confirming to you sellers are in complete control. Thereafter, look what happens. We go back to the gray zone. We back tested during Asia hours, flush lower, right into the support, which is the bottom of the balance. And of course, if you're awake, you then take the trade and done. And you take the trade. Now observe, at that time, I said this is a wide zone, will assess real time. As simple, it's a wide zone. I just need to find a good entry within it. But today, when I entered, I told you watch tempo, tempo, speed, tempo, trend. You know this is down, trending down. There's no reason for you to catch this knife. Now, is there a trade here? No, there isn't. Now, what we are watching for is if this is breaking down, does it hold on the back test? If it does, it's a short, or if it doesn't, and you see something like holding from above, then it is a long. Between now and then, I don't see a trade. Right? So there's no FOMO.
I got you. That's what I'm trying to be more patient on. I guess it's better to go in heavier at places where it's obvious instead of trying to join a trend already.
Correct. So always, Keith, remind yourself, and I'm telling you, don't be impatient about your trades. If you even manage one trade a week, and I mean this, okay? And you might think I'm joking around with you, but I'm serious. If you can even do one good trade a week, what that will do is that will train your brain to identify good locations. It will train you to be patient. And as you are able to build on these characteristics, by default, you will start identifying additional setups throughout the week where you go from 1, 2, 3, 4, 5 trades a week. So the idea is you have to be patient. You cannot be reckless. It's real money that you're going to lose ultimately, right?
Yeah, I've been unemployed for a little bit. I've retired out of the Air Force Reserves and I'm taking a break. And this is where I'm trying to generate the income I need. Otherwise, I need to go
Exactly.
back and find a job.
Correct. So
So
if
I'm
this
trying
is
to get
important to you,
between $300 a day.
right? So does this 300 need to be today? No, it can be 3 months down the road. But I'll tell you one thing, 300 is not a big number. It's very
Yeah, I realize
easy.
that.
It's very easy, but you need to, how do I put this? You need to acquire certain skills. You need to have that practice. Come on, you're from the Air Force. You know, without training, you don't get on the field. You don't get on the ground. And your training is hardcore. And that's the same thing with trading.
Yeah, I think patience is probably the bigger thing, and then nowhere inside the zones. It has to be at the ends
Right? So
or
you
breaking the
have to,
line.
right? So just be careful from here on. And I just hope that once you go back, re-watch this recording of ours, look at those levels. And what I would suggest is go back and please pick one index. Don't trade ES, NQ, both of them. No, that's not how you do it. Okay. Pick one index and focus. I would say pick ES because it moves far slower as opposed to NQ.
I was thinking about the NQ because obviously those big seven are going through some hurt right now.
Sorry?
Bigger boys. Sorry.
No, I
I
didn't
was
quite
saying
catch
that
you.
I was thinking the NQ would be more advantageous just because of those magnificent seven stocks they always talk about having such a hard time.
That's your choice. Again, no problems. Choose whatever you like. Ultimately, it's about the context and how you read it. I only recommend ES because it is a tad bit slower, which means it's easier to read. You get enough time to recalibrate all the workings. You get to understand everything. You get to put the picture together and execute. You get that time. With NQ, it is rapid fire.
You're right. You're right. I
So
will
it all
focus on
depends
ES.
how quickly you can think. See, you want to make 300, okay? It's not 30,000 or something. So 300 ES, essentially, let's say, even if you were to trade, what is it like? 4 MES. If let's say I take 4 MES, that's 2,300 by 20. You need 15 points a day. That's all you need to make 300. In this room, I'm sure you can see it. Making 15 points is in the hardest of things.
And that's
right?
where, right. I was
So
going to go back to where, sorry.
good.
I started the week off taking profits too early, watching it run another 30 points. Yesterday, I decided to hold and I watched two of them go back to zero or even negative. So I'm trying to figure out where do I get out versus
Okay, now
arbitrary.
very simple. When you are in a trade, and because you're learning, I'm going to make it very simple for you. Irrespective of your goal, again, hear me out. You are not targeting 300 today because you're still learning, which means your only target is 8 points. That's all you need. Learn to collect 8 points every single day from ES. That's your goal. Okay, so come Monday, I'm not trading tomorrow, it's Friday, but come Monday when we are trading, you are going to review the action like I walked you through today. And what I would recommend as a practice is you go back to all these days full of last week, mark the EU highs, EU lows. You have my charts. You don't need to even do that. Everything is static. You have these images. You can see every day what the levels were. Mark them and form a story. Okay, so what happened after that? Forget it. But what is prior? Okay, I have the EU high and low. We were opening within the range. We were opening below the balance. We got below the balance. Okay, I don't get this. Let me reach out to him and ask RS, okay, what is it that you saw on that day to pull the trigger?
Okay.
So go back, spend this weekend, if you can, of course, just review the action and understand what is happening.
Okay.
Okay,
This
and
really
then
helps me a lot.
right. And if it is not clear, please pick that particular date. Let's say 27th of September doesn't make sense to you. Pick that date, come to me, look at my feed, right? Go back, US live commentary, go back to 27th, see how I navigated. If I did good, I did bad, whatever it may be, right? Then come back to me. Okay, RS, I don't understand this. I see the EU high low here. I see the value area high and low. Again, are you familiar with value area high and low?
Yes, I don't know exactly what
Very
the
simple. I'm
plan
going to
is.
keep it very simple. Value area high and low, think of it in the same way, like EU high and low, above value area high, strength, below value area low, weakness.
I figured that, but what about in between?
Okay,
Just
in
chop
between is a balance, It's not chop, it's balance.
from one extreme to the other.
That's it. And we are trading balances right here. This is a much larger balance. The value area high and low will be a much smaller balance, but think of them as a balance. Now, there will be times when ES will be trading above value area high, but literally 5 points above will be the EU high, right? So this is a hypothetical scenario where let's say the value area high is 4260 and EU high is 4264. Now, what do? Do you go long above value area high? No, incorrect. You look for acceptance above the 4260, 4264, or initially you're looking for resistance based on the context that we have and the live calls that I'm going to give you. But you need to remember if there are two references coming together, which means possibly it's a resistance first. Or if it is not, then at best what you're looking for is there's going to be a breakout, retest, and you go long. Done.
Yeah.
Right?
You wait for
So
that.
correct. So this is how you want to think. And again, I want you to go back past week, past 10 days, however you like it. Pick those days where you are not clear. Where you are clear, you're clear. But where you're not clear, and ask yourself, what is it that you would do? We are below EU low. We are above value area low. We are here. We are there. Where are the magnets? Where are the price targets? What am I looking at? Just a bit of storytelling, little bit of storytelling. I'm telling you, next 90 days, you will start making $200 to $50 with ease. But how quickly you learn around the storytelling bit is going to determine how quickly you are able to get there. Until then, focus on 8 points. For the next 1 week, trade on simulator account, those demo accounts. Religiously, without fail, I need the trades from you. Like every member out there sends me, look at this guy, Andrew. Every day, without fail, I get a worksheet from him. So what happens is I see your trades, then I come back to you. Okay, Keith, you took a long, no problem. But did you notice that we were below EU low and you should have avoided, and we had an event, or maybe it was trending down or something, and then you're like, oh yes, I missed that part. Now that awareness, that insight is one that will ensure you do not make mistakes moving forward, at least not the same ones.
Makes sense. Yeah. Would you rather me send it as a PDF?
No, please do it on Google Sheets. Okay, it's pretty straightforward. Set it up on Google Sheets, send me the link. Very easy. I can see the past, I can see your current trades as well. So if you repeat a mistake, I can tell you, see, Keith, last week you repeated this mistake and today you did the same thing. Why? And there you go. That's why your subconscious is like, damn, I made the same mistake. So had I not done this mistake, I would have not lost those 8 points.
Gotcha. Now you were able to finally get into my spreadsheet?
Get into your spreadsheet. Yes, I did get into your spreadsheet. It's fine. Yes.
Okay. Yeah, you just told me about unlocking it, and I thought I did it, but I never got confirmation from you.
Yes,
Okay.
yes, yes. It's
I
fine.
can
Yes. So
I can
now,
just resend you that link.
Yes, all you have to do is resend me that link every time so that it's right in front of my face. Let's put it that way.
Okay. Yeah, I understand. I understand.
Okay. So
So
do
on
this. Focus on ES. Limit your trades to 2 or 3 opportunities a day. That's all you want to limit yourself to. So it's like this, right, Keith? If the first trade gets you 10 points, okay, stop trading and spend the rest of the time to understand what the market is doing. Next day, do the same process. I'm going to show you this members chat, okay? And for which I'm going to just stop the recording.